I'm Ashton Addison from EventChain for Investment Pitch Media and FinTech News Network. And today on Blockchain Interviews, we have Robert Materazzi, the co-CEO of Lukka. Robert, welcome to the show and thanks for being here.
Thanks, Ashton. Thanks for having me.
You're very welcome. I'd love to kick off the interview by getting a bit of background to start on what exactly you and your team at Lukka are working on right now.
Yeah, so Lukka is a software and data company that focuses on solving complex data for businesses. And that more specifically today is focused on blockchain data. So for all of the crypto assets that are that businesses are utilizing and helping them anywhere from corporate books to helping strike NAV, tax compliance, or any of the other, and then all of the challenges and processes that lead up to the actual reporting requirements that they're trying to get to.
Yeah, once you start integrating blockchain data, then it can get a little bit confusing, especially with the gray areas in the past here on what exactly are the asset classes of cryptocurrencies and how does that information tie into the company. So if you could give a little bit more, I guess, elaboration into if there's a company that starts using blockchain data, what are the different areas that Lukka would be working within their business operations to help them record that into the books?
Sure. So when they're incorporating crypto assets or any tokenized assets into their general ledger, reconciling the data, collecting it, and then ultimately reporting on it, that's where we come in to help them. And so we'll integrate with traditional software. Traditional software does not accommodate tokenized assets, and so we're covering that gap and helping them to figure out all of the many challenges that come with it. Like you mentioned, one of the main challenges is when we're exchanging one of these assets for another, we have to think of things a bit differently than we're used to doing, than accountants and tax professionals are used to doing. And so we have several methodologies and have built proprietary technology to cater to those needs.
That's great. So is Lukka, the way that you work with companies that are utilizing this type of data is you have the software services for the middle end or the back end, which sort of just aggregates that new information into their ongoing systems that they already have?
Yeah, ultimately it's not a case by case, depending on what the customer needs. Some of them will use our software independently. Sometimes we'll feed into it. But you did very accurately state we're covering middle and back office functions for those businesses. And so they'll conduct, whether it's trading activity, they're collecting payments, they're paying employees, whatever the situation is with their business. We will collect all of the crypto and blockchain specific data, clean it up. We call it enriching that data, which is usually combining it with a couple of our data products. Reference data is a core product. Our software does not work without it. And what that does is it maps all of the various symbols and tickers and fields and whatnot for the thousands of assets that are being traded out there down to a common uniform format. So, for example, Bitcoin is labeled XBT on Kraken, which is a major crypto exchange. But Coinbase, another major exchange, calls it BTC. And it's very common that users, whether they're consumers or funds or whatnot, will buy it on one exchange, transfer it to another, and then sell it there or trade it for other assets. And when you do that, we need to combine it with data products so that we can clean it up. And then we perform a series of reconciliation techniques. Sometimes our team, so a human, is involved in that process, usually for the larger customers of ours. And then ultimately we'll help them report depending on whatever their reporting requirements are.
Yeah. Yeah, it's really interesting because as Bitcoin has been growing, it seems that to define this new asset class, some have said it's a currency, some have said it's commodity, some have said it's property, and the ways that each of those sections are valued can be completely different. And there's no uniformity across the board globally for this. And now, more recently, the SEC is coming out with this new valuation methodology with regards to fair value. And I know that you've been following along with this. Can you talk about what are the changes that the SEC has made here and what was it before and what is it now?
Sure. I mean, and I'll maybe rephrase it as, the concept of fair value isn't new at all. That's
Yeah.
a principle that that is well established and is really core to any accounting or tax or post trade operations. But the way that we address cryptocurrencies specifically, we have to do in a unique way because these assets, like I mentioned earlier, are traded for each other. And that's actually the norm. That's not a rare case or an edge case associated with the trading activity. And so when you're trading them in high volumes on all of these different exchanges, and you get a lot of trading businesses that have artificial volume, that have fake volume, and there's all kinds of articles and news that describe some of the things that are driving fake prices, and you incorporate that into an average price, you end up with a value that is not fair. And so really what not only the SEC, but the IRS, a lot of other agencies are all working on, the AICPA is on a lot of thought leadership on how to value these assets. And honestly, even different approaches need to be utilized depending on how liquid the assets are. Some of them, like Bitcoin, incredibly liquid, offered on almost all of the exchanges out there, if not all of them, is incredibly liquid. So it's fairly easy to determine a value of it. But as you go down the other assets that are less liquid, we have to apply new methodologies. And this can become very challenging, particularly when you're dealing across thousands of assets at very high volumes around the world.
Yeah. Well, it seems Bitcoin, now that it is pretty liquid and it's been trading on all of these different exchanges, besides some anomalies, the price seems to be, or I guess arbitrage opportunities are disappearing, whereas before there used to be a lot more volatility in the price. So when these companies are using Bitcoin, can you walk me through, what is it that they have to record with regards to fair value now with this new proposal that they've implemented from the SEC?
Sure, and most of the exchanges are actually not recording a fair value when their users are trading assets for one another. So when we receive the data, we're receiving without attributes like cost basis or proceeds. And so we combine it with another data source using a unique methodology that's designed to assign fair market value to those data sets so that we can assign cost basis and then create tax lots across all of the various liquidity providers or exchanges, trading venues for these customers. And then we'll create tax lots based on their selected method. So now we're getting into traditional matching like FIFO or LIFO and some other methods. And we'll do that for like assets after we've applied and enriched it with all of these other data sets. So it creates it particularly when a business has been trading, and this is very common. A lot of our customers are the large exchanges, particularly the US exchanges. And a lot of them didn't have to do this in prior years with all of the increased visibility from the regulators and the government, the IRS, et cetera. There's a lot more requirements, and doing this historically can actually be incredibly labor intensive and take a lot of time. And a lot of these businesses are, I would say the majority of them, I can speak for all of our customers, their intent is definitely to comply, to work with regulators, to try to figure out how to operate their businesses in a mature way, thinking about risk, and a lot of them going through their first audits. And that's really one of our core competencies is helping those businesses get through their first audits, working with their auditors so that they can pass them and then focus more on their business instead of their back office operations.
Definitely. And when you have to go back a few years, I can imagine there's a lot of labor involved in that as well. So with this change in hand, a lot of these exchanges and anybody who really has dealt with digital assets, is this a much needed, and is it an improvement for the overall? I know the regulators are putting these new rules in, but is this actually going to have a net positive effect on the ecosystem and help it grow?
I think so, not necessarily because of the regulation and the words that are being used or the methods and the approach, more just because it's putting more of a spotlight, it's creating more momentum. And I think there's a lot more work to go, and let all the smarter people debate all the right rules and figure out the right regulation to apply to this. But at the end of the day, I think more visibility on it and creating more conversations and bringing in more traditional businesses, and a lot of the banks are working, very, very rapidly towards incorporating crypto or digital assets into their portfolios. And so I think that's what's really going to help the industry and the ecosystem overall.
Yeah, it's nice to see the traditional regulators, sort of incorporating and accepting these new types of assets to move them into the traditional system or the new system that's sort of hybrid and combined. And now with that SEC proposal, I believe it's this month where it actually comes into act. Is it a stepping stone for more regulation to come from the SEC? That's like the next steps beyond the valuation for Bitcoin. Do you know?
I think that's a very fair assumption. I would be shocked if any of the regulators stopped focusing on this, or any of the other agencies or tax authorities. I mean, there's a ton of businesses, a ton of users. There's all kinds of surveys out there that advertise up to 14% of the U.S. population, owns some form of cryptocurrency. I believe it's higher than that, and I don't believe that's slowing down. And what you can see, what's going on now with the global economy, with COVID, with the traditional markets and everything else, all this combined, I think is creating a lot of new momentum and bringing people back to it and bringing a lot of first-time users into it. So,
And do you see other valuation and I guess accounting principles like GAAP and IFRS, are they going to start integrating rules for a crypto fiat ecosystem as well?
I hope so. I mean, that's we have a white paper that talks about what we believe, and it is a white paper. It's not advice. It's not official. It's not, GAAP and IFRS don't currently speak to digital assets and how to value them and incorporate them or apply accounting rules to them. But we do believe that that will be in the future. I hope that they do. And that's what we're trying to do, is to apply the rules that exist today, using the intent behind them, towards the situations that we're encountering with crypto, and so that our customers are set up to comply with tax rules and any future guidance or standards that are out there. So
yeah, great. Do you have any other thoughts or suggestions for companies that are starting to work with digital assets in their operations and now get involved with these different regulations?
Yes, I would say that the first step is if you haven't bought any, go do it, because that's the best way to learn about how the ecosystem works. Just transferring, Bitcoin between wallets, or whatever people are comfortable with. But I'd say, at a very, very basic level is to do that. And if you are a business that's thinking about incorporating it, I would say at a minimum, learn about it. We have a lot of resources that are out there with thought leaders that are contributing. We have a product called Lukka Library, where we sell a content subscription to thought leadership. That's lukkalibrary.com. And we have thought leaders. So these are attorneys, accountants, and firms from across the industry that are actually submitting white papers on a lot of the topics, like the SEC guidance, like a lot of other different topics on how to treat crypto assets based on different taxable events. And so if you are thinking about it, I'd say tap into those resources. The AICPA has a ton of resources. They're very focused on blockchain and digital assets. And I'd say don't underestimate the middle and back office challenges. Don't assume that the technology that you use today will be able to handle these. And really just start learning. So.
Yep, great advice. Well, we're running out of time, but what is the best way for the viewers to just learn more about Lukka and get involved?
So our website is lukka.tech, LUKKA.tech. And we have all of our products there. Feel free to reach out. We have contact forms. We have a number of experts and thought leaders. Another way to get very familiar, like I mentioned, is lukkalibrary.com. And you can also find that from our corporate website.
Very cool. Well, thank you so much for your time, Robert. I will leave those links in the description box below for the viewers. All the best with Lukka moving forward, and let's follow up in the near future.
Yeah, thanks, Ashton. Thanks for having me again.